While the Bitcoin blockchain world is undergoing SegWit2X drama, it's being predicted that a Bitcoin futures-based ETF will likely be introduced by the end of 2017. At the same time, the SEC has announced the sudden creation of a cyber unit with broad powers including ICO oversight. And people in the EU are now being told that the European Central Bank has no power to regulate Bitcoin. So if Bitcoin ETFs are prepping up and the SEC is gearing up, the only thing we're missing is bullish news from a mainstream media outlet, leading the way for mainstream adoption. In other news, Forbes has published a strong business case as to why Bitcoin could hit $10,000. Pack your rocket boosters, buckle your seatbelts, and let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins. So with everything that's going on in the news, today feels very, very bullish. After weeks and weeks of the bear turn and bear news with all sorts of fear, uncertainty, and doubt, let that be coming from China or Jamie Dimon at JP Morgan Chase, or maybe someone that you knew a long time ago who emailed you one of those articles on Facebook. It's just been bad over bad. Yet today it seems as if there's a lot of information coming out that is just pushing Bitcoin in that direction toward that big pizza pie in the sky. So with that being said, there's a lot to discuss. There's a lot going on in terms of the world and the drama of the SegWit2X and the another hard forking of Bitcoin, but not just with the SegWit2X drama, but really the ramping up for Bitcoin and cryptocurrencies in the United States and across the world. So let's take a look at the market and peek across the news and let's discuss. Alright, so starting over here at coinmarketcap.com, taking a quick peek at where we are with the cryptocurrency market capitalizations. We're in this world with over 100,000, or 100,000, over 1,000 cryptocurrencies, 1,128 of them listed on coinmarketcap.com. We're at a current market capitalization total of $136 billion, 24-hour trading volume relatively low. Almost 2.6 billion. BTC dominance hovering around 47.6%, so we're still seeing that high levels of BTC dominance between that 45 and 50% mark, mostly where it's been for quite some time now. We have Bitcoin pushing up, sticking around the high 3,000s, 3,914 at the moment. Circulating supply, there's only 16.5 million Bitcoins. 24-hour trading volume, $1 billion, barely changing in the past 24 hours. What we have been seeing change in the past 24 hours is a little drop in IOTA, and then a little bump for Ethereum Classic. I think people are recognizing we're getting closer and closer to some big news, big developments coming out of Ethereum Classic, and even with the developments from Ethereum Classic, of which Ethereum Classic can stand on its own, it's also connected to what we see happening in Ethereum, and so when, with the Metropolis update, with the first hard fork and the Ethereum Metropolis update about to get launched on the live net in just a couple weeks here, the implications are good for Ethereum, it's good for Ethereum Classic, and it's good for the cryptocurrency space overall. NEO is still holding strong after its recent push up from under $1 billion back over $1 billion again. And we're also looking for more and more news coming out of Omizigo, especially after we saw all that awesome news in yesterday's video and everything they have going on, finishing up the testing for the Omizi wallet for the McDonald's Thailand. And after the SDK gets published in Q4, it's very possible that McDonald's Thailand and a lot of other providers can switch over using that network, that proof of stake model. Other areas, just interesting to note, we see waves jump up 15% in terms of the fiat to dollar. We see 10x up 12%, Kyber network down 20%, and all the way down here, number 37, we see PIVX, currently $30,000 if you wanted to have a PIVX masternode, and if you wanted to be minting coins with a PIVX masternode. $30,000 for one of those, as opposed to, let's say, Dash, which is $330,000 for 1,000 of those Dash. And we're going to have this Metropolis update coming out with Ethereum, part 1 in just a couple of weeks, as I was saying. Then we're going to have part 2, and then we're going to have a proof of stake model for Ethereum. And then, with current prices, if you wanted 1,000 of these, you're looking at $288,000 to have an Ethereum node, an Ethereum master node. Really interesting to see how this is turning out with Ethereum, and proof of stake, with people minting or processing transaction fees with Ethereum, with OmiseGo, just as they are with Dash, what they are with PIVX. A lot of opportunities for people to create passive income in this new world. Speaking of people having access to these different cryptocurrencies in the world, turning to the first story of today, we see that there are about to be a lot of additional options for people in North Korea who are interested in cryptocurrencies and all of the different altcoins out there. So what's happening in South Korea, which is an extremely progressive, very advanced society where people are very savvy with current events of the world, current technologies of the world, and they're very savvy about Bitcoin and blockchain technology. But with that being said, they currently only have access to about 5 different cryptocurrencies through their current exchanges, and that's going to get increased to over 100. So what's going on here is that we have Upbit, which is an altcoin exchange created by Dunamu, and this is going to allow investors to trade in these additional different cryptocurrencies. The reason I'm going through this detail, I think it's really interesting to note that in South Korea here, Dunamu is the developer of a mobile app that provides soft copies of newspapers in South Korea that is owned by Stock, which is South Korea's top mobile trading app. And then this mobile trading app is the offspring of the parent company, Talk, which is South Korea's top mobile software messaging app, similar to WeChat in China. And so, roundabout is this South Korea's WeChat looking to use the energy and the expansion of cryptocurrency to give itself a financial edge, a competitive edge in the world of finance, which is going to give their messenger app in South Korea perhaps more visibility, or just more of a competitive advantage for it to compete against the WeChat in China. If you have any information about that, I'm always interested in things that are going on with WeChat and messenger apps. I think messenger apps are very, very interesting technology for the future. And I think it's going to be really interesting to see how these messenger apps integrate with the blockchain technology moving forward, because communication is just as valuable as currency in this world. It's going to be more true moving forward. I think it's really interesting when we look at what's happening with the Kik messenger app. We talked about that in the previous video as well. Moving over to Twitter, we have Bitcoin, and we have SegWit, and we have SegWit on Bitcoin. Separately, you have Bitcoin Cash, which does not have SegWit. Bitcoin Cash has the difficulty adjustment, which is difficult to understand and gives that its own issues. But in the world of Bitcoin, we have this hard fork where Bitcoin has the potential of separating between Bitcoin Core and Bitcoin SegWit2X. And so there's a lot going on here. There's a lot to unpack. Long story short, there's this New York agreement, and this New York agreement, which was signed, I believe, in New York, had about 67 different companies plus who signed on to this agreement, agreeing to SegWit plus the 2 megabyte increase in the block size capacity. Now, what happened is that when SegWit activated Bitcoin hard forked, and when with Bitcoin Cash, and then we had sort of what some people would describe as a break in that agreement. And now that we've had that break in that agreement, and because this agreement, a lot of people say that there were clauses saying that they could, not be in this agreement depending on if Bitcoin Cash or the thing that is Bitcoin Cash now was manifested, or just different contingencies in that. People are pulling back from the New York agreement to stick with the core roadmap of keeping it a 1 megabyte block size for the foreseeable future until at least SegWit can get up and running, SegWit can get at full moving speed, run in full operation to reach its full capacity, and then at that point we can talk about increasing the block size capacity is the position of the majority of the core developers, as it seems. And so here we see from this one tweet that there's 34 different companies that are in opposition to the New York agreement versus the 33 that were in support of it on coin.dance. And so more than 50% are now opposing this hard fork. This information will be in the show notes below if you want to dive a little bit deeper into this. And now it's really interesting because what we have here is that we have this new information that's being come out from Panda, where Panda on Twitter was able to receive snippets of an email chain from this guy Vinny Lingham. And so Panda says, in case there was ever any doubt that the New York agreement was never about scaling or increasing the block size, it was always about firing core. Because what we have is these email exchanges between Vinny and some other people, and it's just really, really interesting what's coming out in terms of the New York agreement and the scaling with the SegWit2X. It's pretty funny. And what else? And some of the inside baseball that we're finding out in terms of what's going on with the New York agreement, what people are saying about Bitcoin behind the scenes, and what people's intentions were for this whole situation. So, and then just people are just going on a little bit deeper. If Bitcoin is subject to a backroom takeover, then it has failed, and we wouldn't, the core developers and people developing inside Bitcoin say that they wouldn't waste their time in improving and protecting a failed system. So even if Bitcoin gets taken over, people are then going to migrate to a coin that isn't taken over by centralization or by corporations. And so then we have this meme right here. This was also funny. There hasn't been a scaling debate, just an attempt to get control over the thing that cannot be controlled. SegWit won, Bitcoin is stronger. There is no scaling debate, is the situation here. And so in response to this Panda tweet that has this information about what Vinny Lingham was saying, and in this snippet right here, he just goes on to just his viewpoint of the SegWit2X and the core leadership, and who has control of the SegWit, or not the SegWit, but who has control of the Bitcoin development and the ability to update Bitcoin moving forward. And so just if in case anyone doesn't know, we've talked about Vinny Lingham here before in this show before, and if you're really interested, ask us about it in the comments below. But there's different conferences that Vinny has been a part of, where Vinny is a big proponent. He is in full support of centralizing blockchain technology, essentially controlling Bitcoin, making Bitcoin highly regulated. He talks directly to financial advisors in Europe and across the world about how they can leverage blockchain technology, how they control it, how they could control it, how they could define the rules, and how they could be the rulers of a blockchain technology, and just comparing that, contrasting that, in his opinion, with Bitcoin being run by a bunch of renegades who have their own perverse viewpoint on the law. And so Vinny is not a proponent of an open Bitcoin blockchain, and so this is just pushing it more and more in that direction, that Vinny is just someone who is would just rather have more control over our blockchain currency as opposed to more freedom for our blockchain currency. And so this will be in the show notes as well. And so check out the show notes. This will actually be on the show notes on our SteemIt page, since putting show notes in the YouTube page is not a good practice. But the key takeaways that are being posted here from this anonymous creator is that there's a private email list where a few industry people try to figure out what to do with Bitcoin. Vinny doesn't understand Bitcoin, and presumably neither do most of the members of that list. 2X is an attack on core, and that people should ignore this information. So in the response to Whale Panda, Vinny posted the entire email thread onto this this website app that you can only access from your phone, and you have to install this app on your phone. It's a really horrible experience. I kind of wonder, you know, who has a desire to push that app. This is the only place to get this information. But someone finally posted this on Reddit so everyone could get the full, you know, all of the information easily accessible from their phone or desktop computer, where they can read all this information for themselves and then continue on in the comments below. So feel free to come over here, take a look at this, take a go at it, and try to, you know, put your own judgments on how this email thread reads for you, and perhaps what people are saying on one hand versus the other. And last point about all this, just try to keep an open mind that whenever you send an email and that email is pro or against anything, it's very possible that that email, and very likely that someday the world is going to see that email. So we probably all have some emails that we wish the world didn't see, but generally speaking, it's interesting to see when these things come to light. So moving on over, we have this article coming from btcmanager.com, where we have the CEO of ETF.com, who's predicting that we're going to very likely see a Bitcoin futures by the end of 2017. And so this is the ETF CEO, Dave Nadig, who stated that the Bitcoin community is likely going to see this emergence of the US-based Bitcoin futures ETF. And so he emphasizes that the rising popularity of the exchange-traded notes in the European markets, such as the Nordic Nasdaq, have been widely used even by banks such as JP Morgan, trading shares of this Bitcoin XBT, which is a Bitcoin ETN traded on the Nordic exchange. He goes on, Nadig goes on to state that yes, you can already trade a derivative in Europe, an exchange-traded note which tracks Bitcoin. Then the race is on in the US to see what gets approval first. Will it be a Bitcoin futures or a straight-up Bitcoin holding ETF? My bet is that we will see a Bitcoin futures approval fairly quickly. And so Nadig is highly optimistic toward this ongoing projects, and we talked about before, there's the Chicago Board Options Exchange, the CBOE, and that's the largest options exchange in the US. trading options and futures and other types of derivatives of those natures. And we know that they are very, very interested in having Bitcoin futures. And that's essentially what's being predicted, is that the Bitcoin futures will actually come before the Bitcoin ETF. We've talked about this before. The new director at the SEC responsible for investments and vehicles such as ETFs is the former lawyer from the Winklevoss coin ETF, Dahlia. And it's really, really interesting to see where this is going to go. We have here Kyle Winklevoss, the CEO of Gemini and the coin ETF, the US-based regulated Bitcoin exchange, stated that Gemini's key concerns in the cryptocurrency ecosystem have always been security, compliance, and regulatory oversight. And by working with the team at CBOE, we are helping to make Bitcoin and other cryptocurrencies increasingly accessible to both retail and institutional investors. So this is just really, really interesting to see the bullish information come across from so many different people. And and then this article goes on to state that considering that the Winklevoss twins have secured a multi-year strategic partnership with a major U.S. financial institution to provide Bitcoin futures, as Nadig explained, it's likely that the U.S. SEC will approve the Winklevoss twins' proposal for a Bitcoin ETF. Very, very bullish, very, very interesting to see this information come out. And having this information come out is going to, trickle into the Bitcoin price as it gets more and more likely that this is going to happen. It's, really, really interesting to see more and more signs that this is going to happen, especially because within the space of the institutional investors, we're seeing competition. We're seeing opportunity, and we're seeing different players getting advantages that other players aren't being able to take advantage of. And so because of that, you have this this Nordic NASDAQ, where the people have access to this, the institutional investors and the retail investors perhaps that have access to this Nordic NASDAQ, they're getting these gains. But in America, if folks over here, if institutional investors don't have access, if accredited investors don't have access to those same sort of options, those same sort of derivatives that they're getting over there, then it just people here are losing a lot of money. They're losing a lot of opportunity, and so it creates a scenario where the regulators and the institutions here need to approve this, not for the regular people, not for the freedom, not for the libertarian values or the social values, but because of the reasons of the cold, hard cash. And because of that, it's going to increase the awareness, it's going to increase the adoption, and then increase the number of people overall that want to learn about Bitcoin, learn about their private keys, and then realize that their private keys are something that they want to have control over in their Ledger Nano S or their Trezor wallet. And none of this is financial advice. This is not a financial channel or a trading channel. This is just an information channel about what's going on. But if there is only 16.5 million Bitcoins and these futures options and the Bitcoin ETF increases the demand, then we could theoretically, hypothetically, potentially expect that price to go up with exponential, dramatic speed toward wherever it's going. It's gonna crash through the it's just going to crash right through the moon. It's going to shatter that moon as more and more people all over the world, hundreds of millions of people start realizing that a piece of Bitcoin is something that they're interested in. And so not only do we have these announcements of the ETF popping up, not only is this happening while Bitcoin is in the midst of perhaps forking again, but at the same time we have the SEC in the United States, the Securities and Exchange Commission, announcing the creation of a cyber unit with broad powers. And so the Securities and Exchange Commission released this press release. You can check it out in this article in the show notes below. for this cyber unit. And with this broad authority, just going over a little bit of this information, their focus, the Enforcement Division's substantial cyber-related expertise on targeting the cyber-related misconduct. And what is some of this misconduct? It includes market manipulation schemes involving false information spread through electronic and social media. So if you ever, false information, if you ever spread a rumor through Facebook or Twitter, then you could potentially be involved in market manipulation schemes, or hacking to obtain material non-public information, violations involving distributed ledger technology and initial coin offerings. We see a lot of scams popping up with ICOs that are not legitimate. So, some people are getting, parted with their money. I think other people would say that it's each person's individual responsibility to do their own due diligence, but at the same time, should there be some regulation to stop, people from completely swindling people. So moving on, misconduct perpetuated using the dark web, intrusions into retail brokerage accounts, and cyber-related threats to trading platforms and other critical market infrastructure. So it's really interesting to see some of this, and I guess it's really interesting to even realize that the U.S. Securities and Exchange Commission has this cyber unit, considering that just recently the U.S. Securities and Exchange Commission themselves were hacked, and information that you hear about just gets brushed over inside the media. But they got hacked. Not a lot of information about that. We know that they have huge risks of being hacked, as we've reported about inside some of the hearings and testimonies that have come out of the Congress. But be that as it may, there's now going to be more power and more oversight from the SEC's cyber units. And it's not just in America, it's in Europe too. We mentioned this briefly yesterday, but Mario Draghi, president of the European Central Bank, the ECB, stated that actually it would not be in their powers to prohibit or regulate Bitcoin and other digital currencies. Really interesting why they're saying it's not in their power to prohibit and regulate it. I wonder if it's because there's another side to that statement. The other side to that statement is that if they're not permitted to prohibit, to allow and to regulate, or to disallow or to regulate, then they're probably not also allowed to create their own digital currencies. And so by stating this, they're probably also preemptively telling their member country banks that they're not allowed to create their own digital currencies for their individual countries, preventing them from having new rights or opportunity as it revolves around the potential of a country having its own blockchain technology. He goes on to say that the risk posed by cryptocurrency is due to its scale, its usage, and its economic impact. He goes on to state that we have to ask whether the effects of cryptocurrencies have on the economy, and added that they're still too immature to be considered a viable method of payment. We talked about this in yesterday's video as well. You can go take a peek at that, but it doesn't say it in this article. It's left out of this one. But now, between the lines, on the lines, he's saying that it's risky because of its immaturity, its scale, its usage, its economic impact. It's just too immature. But he doesn't want to give validity to Bitcoin or these cryptocurrencies, because if he does give the validity to Bitcoin and cryptocurrencies, then they recognize, as central banking presidents, that there's going to be a run on the banks, a run on the fiat, and turning the fiat into Bitcoin, which would cause the economic collapse of the society, short-term, medium-term, long-term, but it would also severely damage the banks themselves, force them to move into more drastic actions. So they don't want to add legitimacy to the Bitcoin. They're not necessarily giving everyone the full information, because the central bank's vested interest is in their fiat currency, not this new decentralized cryptocurrency that nobody controls. He also points to the cybersecurity. You know, we hear a lot about the hacking, and you get to say that, you know, the cybersecurity issues. Okay, yep, goes on here, the state that in reference to the Estonia decision, when Estonia created its own blockchain, that no member state can introduce its own currency. They definitely do not want any member state in the Eurozone creating their own currency. That's counterintuitive to the euro. The euro is a fiat currency created by the central bank inside the European Union. Yeah, but then it's stated right here that the ECB doesn't see the technology to a threat of central banking, but is that true? Maybe that's true, maybe that's not true. I think that a lot of people, we've seen a lot of quotes out there from a lot of people in the know that say central banks directly see Bitcoin and blockchain technology as a threat. I think a lot of you out there would think that the banks think that Bitcoin and blockchain technology is a threat. And we are just at this paradigm of what is going to happen, because we are almost at the point where you just can't keep this toothpaste in the bottle anymore. Like, so much has already come out, and it's just people recognize what's happening. Everyone wants to use the technology. Everyone wants to have their own intentions for the technology, and when that happens, Bitcoin is just a part of that. It's just one of those tools in that kit, and there's no way of letting people play with the one kind of blockchain technology without giving them the full access to the Bitcoin technology, and it's just going to be more than likely exponential. And then how the markets, how the countries, how the institutions respond to that is going to be interesting. All right, so turning to the last article for today, major news. This is it. We're done for. The writing is on the wall. We have Forbes.com saying something highly positive, highly bullish around Bitcoin, making the case for a $10,000 coin. And what are they saying? They're saying what we've been talking about all along. And they're saying not a far long away. They're saying in the near future. They want to have this article, the point of this article, in the case that what everyone says is going to happen actually does happen. And so why do they think that there's going to be a $10,000 Bitcoin? Well, scarcity. There's only 16.5 million of them. And when you look at how much currency is in circulation in the world, that about 5 trillion worth, and that's not counting all the debt and derivatives, that Bitcoin is just a blip in the currency radar. So there's not a lot of Bitcoin, and there's a lot more money than there is Bitcoin in the world. On top of this, 25% of all the Bitcoins mined are lost forever, either because they are improperly generated in wallets, or lost keys, or discarded hard drives, or carelessness. And so there's actually less than 16.5 million. And if the demand continues to increase, the price must go up. That is what Forbes.com says. If the demand continues to increase, the price must go up. And so what is this demand? And so the article goes on to state that it's no accident that Bitcoin's total market value is higher than the likes of Netflix, General Motors, American Express, and that's just a few to start with. And so Bitcoin has utility value. It says right here in this Forbes.com article that Bitcoin can be used like a fiat currency to buy and sell goods of value. And it's also very fast and very inexpensive, especially in comparison to traditional banks. You know, this Bitcoin sounds really, really good. It has increased accessibility. Over 75 exchanges that have actively traded at least $1 million in Bitcoin within the last 24 hours. Highly liquid. You can buy or sell Bitcoin almost instantly in relatively large amounts. A store of value. Just $1,000 invested in 2010, just $1,000 invested 7 years ago, would be worth about $70 million today. So that is much better than a store of value, but a store of value to say the least. And then we have the non-banked, how Bitcoin might thrive in a developing or emerging market where the local currency may be unstable due to political reasons or other reasons where the majority of the population is not banked. Bitcoin may be the best alternative to fiat, and if it isn't Bitcoin, it's definitely going to be some other type of blockchain technology that uses Bitcoin or Bitcoin blockchain technology. But Bitcoin really has the highest network effect in the world, it has the highest dominance in the world, it has the highest infrastructure and foundation for success to be built on top of for it. Oh, I'm not going to get into this today. It was too much fun. I guess real quick. Here's all the Bitcoin in the world right here. And here's all the silver. We'll go over this in more detail one day. So what do we have here? Here's all the gold. Here's all the stock markets, money in the world. Here's all the money in the world. What do we have here? Here's all the debt in the world. There's all the other debt in the world. There's the rest of the debt in the world. Yeah, so there's a lot of money in the world. And then, so continuing on from Forbes, last but not least, and there's also a lot of big money, talking about the network effect, talking about the investment, talking about the foundation and the infrastructure and the amount that's gone into Bitcoin, not just the current market cap, which is around 64, almost $65 billion, but there's billions and billions more that's built in on top of and for Bitcoin. In addition to just its per Bitcoin value. So some of the players in this space include Grayscale's Bitcoin Investment Trust, the Digital Currency Group, Barry Silver, all those guys, the CBOE Futures Exchange, Bill Miller, the Winklevoss twins, as we were talking about earlier with the Bitcoin ETF through Gemini and the Coin ETF. And so it just goes on to state that this Forbes.com article, that their bet is that the big money is already quietly moving money into the Bitcoin currency. And very soon, more and more mainstream news outlets will start covering the Bitcoin and the cryptocurrency. And that's exactly what's happening. I mean, it's not that they're making a wild bet. It's barely a bet at all. This is a mainstream article talking about money going into Bitcoin, why Bitcoin is going up, because they already see the money has followed Bitcoin. They already know more and more mainstream news is going to be talking about Bitcoin and cryptocurrency. They already know more and more money is about to get poured, waterfalled into cryptocurrency. And so this is just trying to get a little bit ahead of the story, so they can point to something saying that they were there for their audience, they were there ahead of the game, while I think they pick and choose what they want to say, when they want to say it, and it's up to each of us individually to start paying attention to these things that we see repeatedly. We're walking around, and sometimes we have the blinders on, sometimes we're not paying attention with our ears or our eyes, or the smells in the air, and just the taste on our tongue. There's a lot that we have a sense to pay attention to. And something that's mildly interesting, let's pull this up for you. We have this one person that pulled up this, they took this photo, which I believe is here in DC, and it's a picture of Jerry Seinfeld with Dave Chappelle. And so what you have here is that you have them right here in this black and white photo. I'm not sure if you can see this. So do you notice them yet? Got 3 celebrities here. See all 3? Of course you do. You have Dave Chappelle, you have Jerry Seinfeld, and you have Bitcoin. And so it's really fun just to see the photo, to recognize the signs, and in this case the literal signs on the literal walls or the windows that are all around us. And so it's just more and more awareness that's going on, more and more that's happening that's going on. more and more that good things are happening in terms of increasing the development, increasing the awareness, increasing the access, increasing the technology. And while the governments and the central institutions are creating rules and regulations, this is a cat and mouse game where the developers and the independent I guess community members are really creating new technology inside the Web 2.0 and the Web 3.0, interacting with not just the internet, but the Internet of Things all around us in ways that are really faster than the regulations can keep up. And so it's really on you, it's really on your responsibility to start paying attention to what's going on and start paying attention to these happenings, because they're just giving us signs of what's to come. So when the news is coming out and the news is full of bad things about Bitcoin, we can be paying attention to that and recognize the good things that had happened, or recognize the other bad things that were said, and just understand what is the pattern that we're seeing. Is this pattern matching a pattern that we saw a year previous or a few months previous, or is this something new? Is this something different? Is this something that we were expecting? And so when you're new to the space, it's very scary. You're not familiar with all of these happenings, with all of this news coming out from the SEC or the financial news or these business leaders or these nations. But together we're figuring this out, together we're putting this together, together we're learning about the differences between the cryptocurrency and the fiat, dollar cost averaging, buying and holding, not taking financial advice from me or from anybody except your financial advisor, because this is risky. This could all go to zero. This could all crash. There could be, who knows what can happen, right? But if the internet continues to exist, and if supercomputers don't, take over the world, and fiat money continues to get printed, devaluing that fiat for the rest of the world, and institutional investors are going to take that money and put that money where it's going to be a store of value for the long term. And it really seems as if, the same thing that the ETF.com thinks, the same thing that the SEC thinks, the same things that the banks in Europe believe, which is that Bitcoin can't be controlled, Bitcoin can't be regulated, and it's only a matter of time before the entire world wakes up and finds blockchain technology on their doorstep and inside their life. So with that being said, hit that like button, leave your comments in the comment box below. Check us out on SteemIt. Come visit us and join us at mintingcoins.com, which is our community where people can get direct access to me and direct access to other people that really care about information in the space. Check us out, see what we're doing, see if there's any way that you want to be part of that community. I would love to, continue this conversation over there. But in the meantime, I'm glad that together we're minting coins.